Hvide to DNB Markets and this webcast where we'll discuss the outlook for Frontline and the tanker market. I'm joined by Hvide Macleod, the CEO of Frontline, and DNB's shipping analyst, Nicolay Dyvik. It's great to have you back, Robert. We'll discuss important themes currently shaping the industry. But first of all, on Friday morning, you announced the purchase of 10 Suezmax vessels, plus an option for an additional 4 vessels. Can you start off with sharing some of your thoughts around this?
Yes, we did. On Friday, we did do 10 Suezmaxes, and it's actually one of the biggest deals we've done in Frontline for a few years. I think the timing of it is ideal. I think we're about to come into a period of much stronger earnings. So quality vessels, all Korean built, all with scrubbers. And I think the beauty of the deal is access to earnings. We're getting access to earnings straight away. And also half the fleet will go back on time charter to Trafigura and at a high level and with a profit share. So in terms of our financial break-evens, we will refinance these ships and come down to a level which is very healthy. So I think having a conservative approach, which has been our strength, especially the last few years with the refinancing and getting the new ships in, this is according to that model, and I think it will be a great deal for Frontline.
If you exercise the options, that is close to $1 billion transaction. It's quite large.
Yes, it is. It is. But the company is large, and looking at the Fredriksen Group, then it's small in that perspective. But we will keep looking for similar deals, and size doesn't scare us as long as the deal is right, and this we think is.
If you look at the markets, the VLCC rates are now around $40,000 a day, and we are in August, which is usually the seasonal low. Has your view on the tanker market changed, or is it developing according to expectations?
I think we always expected the year to be different. When I was here in the winter, then the market had just taken off and was better, and because of US exports, and then we expected it to come off with refineries going out of production here in Q2, and they did more so than normal years given the IMO 2020. So I think the year is progressing very much as we expected, and we expect the second half, which we said now for several quarters, to be significantly stronger than the first half. But now, obviously, end of August, and we started Q3 on a bad note for sure. So Q3 will not be a great quarter by any means. But I think we're now on the steps of a Q4, coming into Q4 soon. Our VLCCs will fix Q4 very soon. So I think the Q4 will be good. We've seen VLCCs almost triple in 2 weeks. And I think this week we'll see the Suezmaxes almost doubling from early last week. So the trend is very positive.
Iran exported 1.4 million barrels in Q1, and in July they were down to 200,000. How important has the Iranian storage been to the upswing you've seen in rates?
No, I think the Iranian fleet, which if you look at equivalents on VLCCs, is about 40 ships. On actual VLCCs, it's probably mid-20s. So a lot of ships have gone out of service because of this, and I think it's overall a positive because clearly the Iranian volume was a positive for on the transport side, but that is now out. Shorter voyages, if you do Iran, now it's being replaced by US crude. So overall, the situation in Iran, I think initially we thought it would be negative, but what we're seeing now is that the combination here also with the VLCCs going out is a positive.
You've seen it in the dry bulk market, IMO supply disruptions, scrubber installations. So far, I think in July and August, only 4 VLCCs each month have been fitted for scrubbers. This is going to increase to 15 and close to 20 when we approach September, October. Have we started to see the impact on the tanker market, or is it yet to come?
I think, as you say, the dry cargo, we've seen it earlier. Now, that's a very simple explanation, was that the dry cargo owners were quicker on deciding to install the scrubbers. So we've seen it on the Capes in Q2 quite a lot, and now we're seeing it in Q3. So we're starting to see it, but I think a lot of the dockings, including our own, have been pushed back and also slightly delayed. And then we'll see the tankers do more Q3 and Q4, and also Q1. So I think we're starting to see some of the effect, but when the market kicks off here, there will be quite a few ships in dock doing this work.
Do you hear more talks of delays, or is installations going according to plan?
For our own group, we are past the worst in terms of delays because we're gaining experience all the time because we're doing so many. I think we've done 25, 30 dockings so far this year as a group. So for us, we are coming down on the length, and we've come down now for the last 2 months. But overall, as an industry, I think it's increasing because most owners will have smaller programs in terms of dockings, and we'll have less time to gain the experience on scrubbers and so forth, which is for many first time they install. So I think we're in a fortunate position.
How important is the refinery maintenance season? In Q2 you had 5-year high refinery outages, and now you are 1 million barrel below the 5-year average. How does that impact the strength of the current market?
I think this is the single biggest factor in terms of turning the market. So we expected first half to be weak. We didn't expect the US crude export to be as high as it was in February, and that changed the market. But short term, so it came off again, back to what we expected. Q2 was therefore weak overall, but better than our many thought it would be. But the second half, I think normally Q3, as we are now in August, is a weak period. But I think a lot of refineries were out in the first half of the year preparing for IMO 2020. So I think the pace at which refineries come back now is going to be the highest we've ever seen in the shipping world or tanker world. And what the effect would also be on the new refineries in Asia, which it's a big year for new refineries. That's also coming. So I think the low estimate is that second half of 19, you'll see more than 2 million barrels more being refined per day versus the first half. And this will clearly have a big impact on tankers, because this will be combined with delays various places, hurricane season and these things. And we're already seeing it in Asia how delays are starting to occur. So I think it's all teed up for a very, very interesting Q4.
It's obviously exciting times ahead, Robert. Both Frontline and the Fredriksen Group has taken large initiatives ahead of IMO 2020 to be prepared. And first, you have announced the purchase of a scrubber manufacturer, and secondly, now recently, a bunkering joint venture with Trafigura. Can you share some of your thoughts behind these partnerships ahead of 2020?
If you look back, then IMO 2020 is the biggest event that we're seeing in the tanker world and shipping world for decades. So for us, given the size of the group and all we have to plan for, we want to be in control of our destiny. That's why we did the FMSI investment, which I think is right in every sense for the company. It gives access, it gives flexibility, it gives good pricing, and it's similar what we're thinking on the bunkers. But bunkers is a difficult market. We want to have access, and a lot of people will have problems getting access. We compare it. You can compare bunkering to a petrol station. Normal petrol station, you have one product, everybody's in line, but now you're going to have various products, and a lot of these petrol stations will not have availability. So we are securing availability, and we're securing the price is obviously going to be, or hopefully going to be, the best out there. But for us, timing and assurance on the quality is the most important. And I think it ticks those boxes, and I also believe in volume, and we as a group will probably spend $600 million, depending on oil price, but approximately $600 million on bunkers next year. So it has a huge impact on our fleet, and now joining up with Trafigura, and they also become our second biggest shareholder now with the Suezmax deal, I think we'll be in pole position. So I think we're doing stuff that's important and right prior 2020.
Do you say things are starting to play out the way you have positioned yourself for, or is it too early to say?
It's too early, but let's see in 3 months. So obviously I'm very bullish the outlook, and I think that will come right. And if we get that right, then we're getting 2019 right. In terms of our ships, as you know, we've held back. We've hardly done any time charters, except now on the large transaction, but that is at levels that's far higher than what you saw earlier this year. And again, with profit share. So I think we've taken the spot game to an extent of almost being 100%. We've also chartered in ships on the VLCC side because we believe in the markets. And now we will play it right. When into the strength, we will be conservative, like we just did on the deal. We took our insurance against the market drop. So we have that as a base, and we'll do that on the fleet as we go into 2020. But we'll only do it if we think it's at levels that is right for the company, and we're not there yet, given our market outlook.
Since Q4 last year, the bunker price is down about 30%. The IMO spread is broadly unchanged, and is now close to year high. The JV with Trafigura, is it primarily due to price, quality, or availability? What's the single most important factor behind the JV?
Availability. Yeah, as I just said, it's the access that is most important. And as you say rightly on the spread, it stayed similar or same as it was whilst the price come down. So it shows strength in the spread. And I think the spread will come out, and therefore we've not done any hedging, and I think we're now positioning ourselves right. Combination of the JV on the bunkers, and also increasing the fleet, and now by the end of the year we're probably almost half the fleet will have scrubbers. So we get it right on the spread, then we will be paying down these scrubbers pretty quickly.
In terms of, or when we look at scrapping, it's not been that much activity year to date, at least within the VLCC segment. Do you think there will take place any scrapping now that rates are around $40,000 a day?
It's a very good question, and we've seen, as you said, very little so far this year. I think we've seen 5 in total, whilst the delivery has been almost 10 times that. So the pace of, and this has been clear for quite some time. The older ships, virtually all of them are paid down. So if you expect the market to increase, you might as well wait and play it out. But with $40,000 a day on the modern ships, these old ships, especially coming into next year with a higher bunker price, an old ship will then probably be more a 15, 17 territory when the rest are making 40, 45. So I think, and also with our customers, then 1 out of 10 can take the older ships, and that's soon going to be 1 out of 15. So there will be some ships disappearing, but I think it's going to be, rather than recycling, it's going to be more the storage place, which we're already seeing now. And it's not contango storage, it's storage due to IMO 2020 that's coming in play. So I think we're down now to probably 40 ships on storage worldwide, including the Iranian fleet, and I see that as increasing. So in terms of the tanker market balance, then we've got an alternative to recycling, which is taking out for storage. And as long as they're not trading and competing with our own ships, then that's a positive.
If you look at last year, 50 VLCCs were ordered. Year to date, only 16. This could lead to potentially quite low fleet growth in 21, 22. Do you view this as a cycle extension or a sign of worry that if everyone's positive, why there is limited ordering when rates are high?
This is when I should knock wood, but that's going to be a problem for our microphones. But my answer is pretty simple, that I think the slowdown now is a blessing in disguise in terms of the length of the cycle. It's clear that we believe that the cycle will be strong, and this will prolong it. But I'm never going to say that the orders will go down to zero. But the fact is, there's about 65 ships left to be delivered this year and next year. These were ordered at pretty low levels, like low to mid-80s. And looking at the group of ships, there are quite a few of these ships that are for sale. And I think that normally owners want to ship in 2 years rather than in 2 months, because normally the market's average or bad. But now the outlook is very, very good. So I think people will want a ship that's delivering soon rather than later. So my simple answer is that we need to have resales or soon to be delivered ships. We need those to be sold before you get many more future orders. So it looks to me, if you combine it also with the access to finance and the general interest for the sector, which is clearly down, I think it will remain slow. And then that's going to, as I say, be a blessing in disguise, and hopefully other segments will be picking up the slack and ordering ships, because this is always the problem in our business, that you make money, you order ships, and then you kill the cycle. And I'm never going to say it's a different cycle, but I'm hopeful we're in a situation here where the cycle will be slightly stronger for slightly longer.
The US-China trade war is creating a challenging backdrop for close to everyone. China announced tariffs on crude oil on Friday. What would the implication be for the tanker market in your view?
I think for the shipping markets, it's bad. On the dry side in the Fredriksen Group, we're seeing it. Although we have the various markets now performing, Brazil and so forth, so it's not as bad, and there's upside for them now from the bottom. Whilst tankers, we haven't seen that much of an impact. What happened on Friday, I don't think the impact's going to be that large. And the simple answer is that there's not that much going at the moment to China. It's going elsewhere, and they're getting from the US. So US is supplying different areas, and China are purchasing from different places. So it's I don't think it's going to be huge.
I think on our numbers, US was on track to export around 25% of US crude, and now they're down to 5%, but other Asia has taken the volumes. So from a ton-mile perspective, it's quite neutral.
It's definitely exciting times ahead. Thank you so much, Robert, for joining us here today, and thank you for watching.